What if I told you the biggest secret to building wealth isn't a high-paying job or starting the next big startup? It's much simpler and anyone can do it. But here's the catch. Most people ignore it and spend decades struggling financially. Are you making the same mistake? I'm going to reveal the best index fund and ETF you should know about investments that could be the cornerstone of your financial freedom. Imagine this: you're 65, ready to retire, but instead of enjoying freedom, you're scrambling to make ends meet because you relied on outdated financial advice. Inflation has eaten away your savings, and Social Security just isn't enough. Scary, right? This is the grim reality for millions of Americans who didn't take the right steps early. But wait, don't panic yet. Here's a quick question. Do you think billionaires like Warren Buffett stress over retirement? Of course not, because they follow a tried and true strategy. Spoiler, it's not stock picking or crypto hype, the good news. You don't need to be a financial genius or have a fortune to get started. With index funds and ETFs, you can piggyback on the performance of the world's best companies, reduce risk, and grow your wealth, all while sipping coffee at home. How index funds and ETFs work. So what exactly is an index fund? Picture this: instead of betting on a single horse in a race, you bet on all the horses. An index fund tracks the performance of an entire market, like the S&P 500, which includes the 500 largest US companies. If the market grows, your money grows. Sounds great, right? But what about ETFs? Are they better? Before we dive into that, let's look at why index funds have been endorsed by legends like Warren Buffett himself. Buffett once said he'd bet on an index fund over a room full of stock-picking experts. Spoiler alert, he won the bet and made millions, but not for himself. He donated it all because billionaire things now, ETFs or exchange-traded funds are like the cooler younger sibling of index funds. They track indices like the S&P 500, but trade like stocks. This means you can buy or sell them anytime during market hours, unlike index funds, which are traded only at the day's end. But wait, how do you choose the right one? There are hundreds out there. Let's break it down step by step. Here's the thing: not all index funds and ETFs are created equal. Pick the wrong one, and you might end up paying high fees that quietly eat into your profits. Think death by 1,000 cuts. For index funds, one of the best is the Vanguard S&P 500 Index Fund VFI-AX. It's low cost, reliable, and has a proven track record. For ETFs, consider the iShares Core S&P 500 ETF-IVV or Vanguard Total Stock Market ETF-VTI. Both offer diversification at rock-bottom costs. With just $100 to start, you can own a piece of companies like Apple, Amazon, and Tesla. How cool is that? But here's the ultimate question: how do you actually start investing today and avoid the pitfalls most beginners fall into? Don't worry, I've got you covered. So what's your next move? Will you take control of your financial destiny, or will you let another year pass by? Start small, stay consistent, and let the power of compounding do the heavy lifting. Remember, every wealthy person started somewhere. This could be your beginning. Ready to take the leap? Hit the like button, subscribe, and let's build wealth together. And with an inspiring tagline on screen: money mindset, your wealth, your future.